Welcome to In Business. This download is part of Peter Day's World of Business. And this week, a glimpse of a vast new project on the River Thames that just might change the shape of Britain. Peter Day explains.
It's the biggest building site I've ever seen, down the Thames about 30 miles east of the centre of London. It's a real adventure, this. Where are we now? According to the GPS,
According to the GPS, we're about 400 metres out into the Thames. Here we are on the newest part of England. The dredger is just offshore and pumping the material to create the new land for the container terminal.
And the material comes straight from the bottom of the Thames, straight in here to create new land through these pipes that come from the ship to the shore. It's pretty straightforward, actually, isn't it?
A relatively simple process. The dredge is like a big floating vacuum. The land comes up out of the ground, and then we do a whole lot of engineering works to prepare the land for building a new port.
New ports don't come along very often, and the people driving me round are the men in charge. Andrew Bowen, Director of Civil Engineering, and the Chief Executive of the London Gateway project, Simon Moore. London Gateway is Britain's new container port, designed to be big enough to unload 6 of the largest container ships at once. The land on which much of the port is built comes from sand and silt dredged to deepen the waterway for these great big vessels. The rest of the site used to be a large Shell oil refinery. The vast project is owned by the Dubai company DP World, which operates 60 big terminals in more than 30 countries. It took over London Gateway when it bought P&O in 2006, just before the global economic storm broke. This sort of project takes years of planning, official approval and money raising. There were huge uncertainties after the global economic crisis hit world container trade and Dubai's own property market slumped. The London Gateway project was actually put on hold for most of 2009, but work resumed 2.5 years ago. Simon Moore told me where it's got to now.
We're about halfway through the construction program, and the key point is that the biggest container ships in the world will be arriving here from the fourth quarter of next year. This is a very, very big site. Now, and let's not forget that our activity carries on for 100 kilometres out to the east into the North Sea.
That's to get the dredging right, and that's permanent dredging. It's not going to silt up, so that's to get the ships in here.
That's correct. It's creating a maritime superhighway and making the water deep enough and wide enough. And we do that dredge in an alignment that stays in line with the natural flow of the River Thames so that it doesn't continually silt itself up.
This is an area 2 square miles, twice as big as the square mile of the City of London, and it's, about half an hour by rail from the City of London?
We're just 20 miles away from Europe's largest economic zone. So this is the closest that we can really get to London. And when you're standing here surrounded by 16 million tonnes of material, 1,000 construction workers on site, a new railways being built, a new port being built, you can feel you're in the middle of nowhere. But we're 20 miles from 17 million consumers.
And you've got one very important thing in place now. You've got the quayside, haven't you?
The quayside is starting to make an appearance, so the River Thames does now come up against the quayside. The proposition is no different than it was hundreds of years ago, and why the Port of London was the biggest port in the world, because of the massive consumer market it had on its doorstep. And we're bringing London's and the UK's hub port back home again to the River Thames. But to do that, we've got to make the river deep enough, wide enough, to get the biggest ships in the world here.
This is a very ambitious project, not just because it's costing £1.5 billion. Attached to the wharf where the containers are unloaded and the roads and railways next to it is a big area set aside for clients to build huge warehouses to handle the imported goods. In modern jargon, it'll be a logistics park. It'll enable companies to site their distribution centres pretty close to those consumers of London and the southeast of England. That's the intention, anyway. London Gateway wants to do no less than reshape the logistics pattern of British distribution. Simon Moore again.
It's what we call a complete trimodal platform, which will allow our biggest consumers in the UK to hold their stock right next to the port without having to go onto the public highway, say just 20 miles away from the City of London. So this is a unique proposition in the UK market, and hopefully will be a national asset that all of us in the UK can be very proud of.
Let's turn towards the sea and tell me what I'm going to see if I come back here, not in 1 year's time, when there'll be actually one berth going, won't there, but in, 5 years' time, when you've got 6 of them going.
I think in 5 years' time, this is where you will physically see the UK trading with the rest of the world. This is where it happens, and I would expect to see some of the biggest container ships in the world. I would expect to see some of our biggest high street names holding their stock here at London Gateway and using London Gateway as their primary point of distribution, not just into the southeast, but to the UK as the whole. We'll have direct rail connections. The environmental agenda is becoming increasingly important. Over 30% of all the traffic from here will move on the railways. So this will be a real hub and hive of activity. This is where the UK will be physically trading with the rest of the world.
But this is all about sucking stuff in. The containers that come in here will be full of things that people in Britain are going to buy. There's not going to be much trade going the other way, is there? That's the tragedy of it from Britain as a manufacturing nation point of view.
Unfortunately, that's been the way for many years now, if not decades. We've been an import-dominant country. The things and the items that we consume tend to be manufactured outside of the UK, and much of that, 70% of that, is coming from Asia. However, about half of the exports that will be moving out of London Gateway, we would expect to have cargo and commodities in them. And we very much hope that London Gateway can be a further catalyst to be of assistance somehow in the supply chain for British exporters to become even more competitive on the global market. And we look forward to doing our bit to try and narrow that trade imbalance.
Lots of enthusiasm at London Gateway, but building a new port is a gamble. DP World is laying out huge sums of money in the hope that shipping lines will sign up to use the facilities and those logistics centres will actually be built and find tenants. At the same time, the huge uncertainties hanging over Europe's economic future overshadow the prospects for world trade and the need for new facilities. For some perspective on this, I turn to Neil Davidson. He's a ports expert with the shipping consultancy Drury, which has worked for London Gateway in the planning stages of the project. And he's cautious.
The first thing to say about London Gateway is that we have to look very long term. All of these port investments that are taking place in the UK, of course Felixstowe has expanded recently, as well as London Gateway coming on stream next year. These are 20, 30, 40, 50-year investments, so it's very long-term impact that we're talking here. So it's tempting to look at this year, next year, the short term, but the amount of money being invested means that it has to be a long-term view in all of these cases.
That's the timescale then, longer than most investors, most capital markets can think about.
It is, because it's pouring concrete, essentially. It's investing in infrastructure, and that's the unusual nature of the UK port industry, of course, in that the private sector is the one that invests in the infrastructure. The private sector is the one that's paying for the concrete and putting down routes that it can't take away. And that's quite different to how it works in continental Europe, for example, where generally the state is the body that's making the infrastructure investment, and the private sector is doing the superstructure and the equipment. The private sector here in the UK has to take a very long-term view because they're paying for the infrastructure.
We don't have to look 50 years, do we? Let's look 5 years out, that sort of scale, when presumably London Gateway will begin to be written into the contracts.
Well, yes, London Gateway has to be written into the contracts sooner than that because they have to start handling volume to start paying off their significant upfront investment. So they have to win some anchor clients, basically, from the shipping world.
A shipping line, essentially, has to agree that this is a good idea, shipping into there.
Yes, they have to get a shipping line, or, as is the case these days in container shipping, an alliance, because most of the shipping lines group together to have the scale to be able to operate very large ships. So there's one or two players that operate on their own. Maersk Line, for example, is the best case of a single operator.
And the biggest?
It is the biggest in the world, but all of the others operate together in some shape or form, and so London Gateway has to win at least one of those initially as an anchor client, as well as some anchor clients on the distribution side as well.
The people behind London Gateway argue they're trying to change the shape of not just shipping in Britain, but the way that distribution works here. At the moment, wherever their ultimate destination, much of the country's container imports are sent to the English Midlands by truck or train. And in the Midlands, there's a notable number of great big warehouses used as logistical bases for the whole country. They grew up 20 or more years ago when the container revolution was taking hold and Midlands land and labour was cheaper than elsewhere. So, many goods are now sent by container load north, only to be unloaded there and then trucked back to the shops and malls of southeast England. If importers build warehouses at London Gateway, then the distribution could be done direct. That, anyway, is the London Gateway argument, as put forward by Simon Moore.
Our logistics supply chain has become a little bit disconnected. The one thing that hasn't changed is that London and the South East is still the biggest consumer market in the UK. So when you have a blank piece of paper to try and do the right thing in the 21st century for the UK, the two big things you want is to be able to hold stock, to have a large piece of land, as close as you can to London, where you can give cargo owners the opportunity to hold their stock there, but also to bring those big ships back to the Port of London. And that's what London Gateway is all about.
But your logistics pitch to would-be clients here is that you're much closer to the market than are those big boxes in the Midlands.
That's right. 2/3 of the UK's business comes through ports in the southeast. However, only 10% of the UK's warehousing capacity is in the southeast. Land is expensive here. So that's why a lot of the warehousing in the UK and distribution has gone further up country. And this is giving many cargo owners the opportunity to completely re-engineer their supply chains. It won't be for everybody. And I would still expect a relatively small amount of the cargo that moves across London Gateway to actually go into the logistics park, because a lot of it is going to head straight to the massive consumer markets here in the southeast.
But it's still got to go to a distribution centre somewhere, hasn't it? It's not going to go straight to a shop from here, is it?
Well, some of it does. Some of it will go to distribution centres, in other parts of the UK. So this is providing choice. And by being located here in the southeast with direct rail connections right next to the port, it also gives those cargo owners the opportunity to use coastal shipping to distribute their goods around the UK. And that's also very environmentally friendly, keeping traffic off our national road networks, which are already under a lot of pressure.
What's it feel like launching a great big enterprise like this, which is based on trade, at a time of enormous economic uncertainty, depression in Britain, who knows what's going on the continent? This is bad timing, isn't it?
No, I don't believe it is. I think there's a couple of important points here. One, the majority of our deep-sea trade is with Asia, and the ships on that trade are getting bigger and bigger, and it's important that the UK's got the right ports to handle those big ships. If we don't, then those ships will go to other ports on the continent, and we will become a spoke of somebody else's wheel or somebody else's hub.
Well, that's the argument of the company putting a lot of effort and £1.5 billion into a brand new container port. Does it add up for a logistics expert such as Neil Davidson at Drury?
You can't just say, one size fits all and the UK's distribution network will change for everybody. It will become more of a mixture, basically. What you have today is most of the cargo going to the Midlands and being distributed. What you'll have in the future is a more mixed picture of some cargo going to the Midlands, but some being distributed straight from London Gateway, some being distributed straight from Felixstowe, some being distributed straight from Teesport, for example, in the northeast, where smaller vessels will take cargo and they do port-centric distribution as well. So what we'll see is a more complex distribution picture in the UK.
But London Gateway is putting into the mix a huge facility, isn't it? How does it alter the total flow of things if it succeeds?
One thing it doesn't change is the overall demand for the UK, and that's rather unfortunate because at the moment the demand is very flat because the economy is very flat. The timing isn't ideal because London Gateway is coming on stream just when the economy is flat, and this is one of the problems. I mean, the public inquiry for London Gateway was 10 years ago. Well, 10 years ago, the picture, the outlook for the UK container port industry was very, very different. 10 years ago, DP World didn't own P&O, and the project was being put forward by P&O. At that time, there was pressure on UK container port capacity that we'd experience congestion, and the outlook, nobody was foreseeing the financial crash of 2009. So the outlook was very different, and the aim was to try and get capacity in as soon as possible. The problem, of course, is that it's a slow process to add capacity, and when it comes on stream isn't necessarily exactly when you want it to be, because the world moves on.
Neil Davison at the Shipping Consultants Drury. Now to the rival port that's dominated British container trade for the past 30 years, since the whole industry started, really. Even when DP World is fully up and running, the port of Felixstowe in Suffolk, owned by Hutchison of Hong Kong, will still be the biggest container terminal in the UK.
We have 350 hectares here, 9 berths, over 3.8 kilometres of quay lengths. We're looking at the terminal here that we are continuing to develop. But when we move over to this side, you can see, in fact, Harwich is directly across from the water here. But this is the newest terminal that we put on September last year, and you can see it's already pretty full. The deepest water in the UK, which can handle the biggest vessels that's in service at the moment. That vessel there, you can see that is actually about 14,000 TEU, the biggest in its class at this moment.
So that's 14,000, I have to think of it as 14,000 units of containers, yes, and of course the unit is because you can have big or small containers, can't you?
Yes, that's right.
Clemens Cheng looks out over the flow of activity below us in the port of Felixstowe, which is still adding new facilities. He's Managing Director of the Central Europe Division of Hutchison Port Holdings. What does he make of the new competition from London Gateway?
We welcome competition, and in fact, in Europe, port sector is a very competitive sector, and people who know what they are doing, choose the right place, will actually do very well. We have the location, we are so close to the major shipping lane. At the same time, we have so many trains coming in and out of Felixstowe here. At the same time, A14 is at the end of the distribution centres. So from that perspective, we have all the connectivities. Now, when you then look at it, will a manufacturer want to take their truckload of cargoes through M25, through a very congested railway to go down back into London? Questionable. So if you're developing something which seems to want to reduce the logistic cost for, say, 11 million population in London, what about the rest? What about the 50 million citizens of this country? And also the exporters. They need a very efficient port from a cost perspective as well as from a logistic perspective to ensure that it continue to function and work. So, we like competition, but on that basis, we're not actually that concerned.
Yeah, London Gateway says one of its key factors is being so close to such a major population centre in Britain, so you cut out quite a lot of transport costs, rail or road, to get to the people. You argue exactly the other way round.
Well, we're the port for Britain. We're not only for London. London is 70 miles away from Felixstowe, so it can be served from Felixstowe, but we're servicing the entire country.
When a new port puts on millions of new container possibilities a year, which is what's happening, what does it mean operationally for you? You've got to cut your rates to compete, or how do you respond competitively to something quite new like this?
I think our philosophy has always been working closely with our customers, look at their needs and see what we can add value in that whole chain of logistics. We will continue to do that. We have to pay attention to what our competitors will be doing, but at the same time, the key thing is don't lose focus and don't lose sight on what's the customers required.
Is there room in Britain for both of you?
Well, competitions will be here, like it or not. As I said, we've been competing with Rotterdam, we've been competing with Hamburg for other means of business.
Does it get more difficult to argue for investment in Felixstowe when something like London Gateway happens, or do you respond to London Gateway by investing more here? How does it work?
We expand based on what the customers are telling us. So from that perspective, our business case is actually based on the need of the customers and how we can add value to them. Although we have to keep an eye on the competitors, but at the same time, the fundamentals of this port is excellent, and so it will continue.
And of course they are embedded here. It's expensive for a shipping line to change its port, isn't it? It's got all sorts of other things going on in the chain that accumulate around being in a particular place.
If you don't add value to them, over time they will switch. And that's why it's important that we have to continue to remain focused and work with our customers to ensure that they can get the best service out of here. And with all the connectivity here, they have all the convenience to go to wherever they want to go in the country.
But what happens to ports in an economic storm, such as the one we're experiencing now in Europe? What actions can an operation like Felixstowe take? Hunker down or find proactive ways of coping?
Well, I think the short-term economic problems will get resolved. I think we are a strong believer in world trade. And particularly if Europe wants to get out of this short-term problems that we have, it will have to trade itself out of it. So, on that basis, we are very confident about the port business. We have a 3% increase in import, but 8% increase in export on a year-on-year basis. Now, the good thing is export is increasing. And you see that there are quite a bit of machineries being shipped, cars being shipped, manufactured goods being shipped. It's all here to actually help the country, to help Europe to actually get out of this current problems.
Clements Cheng at the port of Felixstowe. Of course, the ports get their business from the giant shipping lines that use them. Container shipping is a volatile industry with tremendous fixed costs of keeping ships at sea on regular runs, even when tough times shrink demand for their services. The Danish giant Maersk is the biggest container shipping company of all, and like its competitors, it's been suffering during the last 5 years of economic hardship. Maersk is currently committed to using Felixstowe, but the company is obviously one of the key clients London Gateway will be anxious to sign up. Mark Cornwall is Maersk's UK and Ireland operations manager, and he told me about this industry which, barely seen, lies behind so many of the things we use and buy.
It definitely is a difficult industry to make a profit in. It's traditionally been quite a low-margin industry. It's difficult from the point of view that the assets that you're deploying have to work over an extraordinarily long time horizon. It's quite a fragmented industry, so there are still quite a lot of industry players. There are different types of carrier. There are global carriers. There are niche carriers predominant in different trades. So there is an awful lot of competition, and the margins at the best of times are relatively low indeed.
And when times aren't the best, then freight prices plunge.
Yeah, they do go down a long way, and I think we've seen a lot of the main lines have lost a lot of money over the course of the last 6 months. Previously, in 2009, a lot of lines lost money as well. It's difficult to maintain a balance between the supply and the demand when, for example, in 2009, global demand falls off a cliff and there's an extraordinarily large number of ships that have been ordered with the benefits of the growth that we saw in the mid-2000s.
Why do people do that, though? Why do they order ships when the going is so good, knowing that this is a cyclical business and it's absolutely inevitable that there's going to be overcapacity because of the ships they're ordering at the time? Why do they go on doing that?
The big ships provide tremendous economies of scale. And as trade has grown, then the industry has tried to order ships to provide the service that global trade requires. Unfortunately, when you're planning the purchase of an asset that's going to last for 25 or 30 years, it's not an exact science. As we've seen with the financial crash from 2008, that time horizon and the rapidity with which things change in the global economy make it very difficult to align capacity to supply.
What can you do when times get so hard?
One of the main things we've done is we've slowed down the ships. So whereas 3, 4, 5 years ago ships were going faster than 20 knots, now they're generally in the range of 16 to 18 knots. That is a way of using additional ships to run the same routes by extending the transit times, but it's also very good for the environment. If you reduce the speed of a ship from 20 knots to 18, your fuel saving is about 24%.
Don't the customers mind the fact that the timetables have changed, that you're slowing down?
Yes, they do. What we're trying to do with slow steaming, as we call it, is to save money, which obviously they see the benefits from in their supply chain costs.
And then you put more ships on, but they're sailing slower too. That actually adds up to an overall saving, does it?
It actually does, yes. That's only one of any number of things we do. For example, we've cut our capacity between Asia and Europe so far this year by about 9% through sharing space with some of our competition. We take space on their ships, they take some space on ours. It's a way of deploying ships into different trades and cutting some of the capacity between Asia and Europe.
Maersk runs a daily container service from China to Europe called the Daily Maersk. So what about London Gateway? Will Maersk be calling in on the Thames anytime soon?
I think the London Gateway product looks like it's going to be an outstanding facility. Clearly, it's a facility that we've looked at and we've had some discussions with DP World. But equally, we have a commitment to Felixstowe. We've been at Felixstowe for a long time. We work very collaboratively with Hutchison Ports, who operate the port there, to try to improve our product and improve their product as well.
This is a big increase in capacity, port capacity, at this still very uncertain economic time. What's the impact of that on the business?
I think for the last few years there's been a shortage of deep water capacity for the biggest ships at ports in the UK. So I think it's quite encouraging that Hutchison and DP World have both made investments in the UK, and indeed DP World not just at London Gateway but also at Southampton. It's an important investment because it does catch us back up in terms of capacity for big ships.
What's that mean? They've been queuing to get in?
There have been delays on occasions over the course of the last few years where there hasn't been sufficient deep water berth capacity. Obviously, Felixstowe have just opened their new terminal, so that has helped ease the problem. I don't think that, at least in the short term, London Gateway is providing an enormous infusion of additional capacity. It's simply helping us get past what has been something of a bottleneck in the last few years.
Mark Cornwall of Maersk Shipping. If the huge global shipping industry is so volatile, the business outlook sounds rather uncertain for a brand new port such as London Gateway. But ports are different, says the consultant Neil Davidson of Drury.
The port industry is a very consistently highly profitable business. It doesn't suffer in any way similar to container shipping, a complete contrast to container shipping.
Because it's so much more difficult to add capacity in ports.
Yes, high barriers to entry, importance of location, the uniqueness of each port. Container shipping is a much more homogeneous industry, much more commoditised in effect, whereas ports are much more unique in what they can offer, and the profitability reflects that.
Finally, back to where we started. The dredging continues day and night to build up the new land on which much of London Gateway will be built over the next year. The man in charge, Simon Moore, has few doubts about the project.
We have a blank piece of paper here. This is a national asset for many, many years to come. So it's important that we're building not just for today, but also for tomorrow. And London Gateway will be best placed to keep the UK attractive and on the M1 of world trade. We want these ships to keep calling direct into the UK.
London Gateway will change the transport map of Britain, no doubt about it. The big question is, how long will that change take?
Peter Day, the producer of In Business, was Caroline Bayley.